The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. This is the Wednesday, July the 25th edition of Tiger Technicians Hour. I'm here Monday, Wednesday, Friday at this time. Turns out that I will also be doing the noon to 1 o'clock show for Larry Pesavento, and it'll be my pleasure to do so. And thank you, Steve, for 2 great hours. And let's just go straight into the business of the market. The chart that I'm showing here on Tiger TV, if you are looking, this is just a fabulous medium. You know, wherever I am, if I'm in the car or whatever, I just take my cell phone out and I go to tfnn.com/wowza28.php. That's where I get it. And it's right there. You can see the charts, listen to what everyone's saying. And now, of course, we have just a slew of activity throughout the day from 9 a.m. when Steve kicks off to when Tom wraps up at 4 o'clock till 6. Just fabulous medium. Anyway, let's go straight to the charts. And what we're looking at here is that the Dow has made one of my least favorite patterns. It's called the cup and ladle pattern. Not exactly, because the lip on the left side is 13,338. And it went down to 12,035 and then rebounded 12,961, which was the 12,931 congestion area from the left side back in mid-May, early May. And we've come right back, and then we made a nominal new high, 12,977. I haven't typed it in on this chart, 12,977. And now we're pulling back. But where are we pulling back to? And that's really the important. This is key. One of the reasons why I say the cup and handle. Now, I know that I invest in Business Daily with Bill O'Neill. It's one of their favorite, one of many patterns, but one of their favorite patterns that they talk about. I happen to find it problematic just for other reasons. That's not to say that it can't work and give you some great breakouts. I just find that it fails so often. And not only that, when it does break out, it almost always comes back and retests the handle. So a cup and handle looks just like a U shape with a tiny little U next to it. That's the handle, like an English teacup, and a little pinky finger going up as you hold the handle. Now, this is very interesting because in this particular chart, what we're looking at is that the latest high, 12,977 on the Dow, was accompanied by much lower stochastic, the slow stochastic, that's the lower technical indicator here, the yellow and red line crossed over negative. Stochastics at 50%. I like to say over 80% is great. Under 80%, you got to be careful. And the on-balance volume, the green line there is just it's not very good. These vertical lines of volume, I use volume in a special way, and at this particular point, I have no need for the volume, other than to say the histogram, those little gray lines that you can see, that's the makeup of the MACD, the moving average convergence divergence, where the 12 period is divided by 26, and it gives you a 9-period moving average differential. And it's gone negative. It's minus 16. And it's constantly going negative over the last month and a half. 2-3 weeks. And I'm considering it to be a negative. And you see that mauve line, that thick line there? That is the 200-period exponential moving average, 200-day moving average, let's call it. Well, it turns out that line coincides. You see this little green line there? Some of you can see it. Yep, you can see it. I can see it on the chart. That's the 200-period simple moving average. Well, it's about to cross over the 200-period exponential moving average. If it crosses over it, then at least for a little period, you've got to be careful because it says that there is selling pressure. So we're going to watch that closely. The level to watch on the Dow is yesterday's low of 12,521, was it? 5,521. And if that's taken out, let me do this. Let me just go through all the numbers. The Dow is up 36 at 12,653 after 3 days, just really terrible days. And these are called ChapmanWave Roman candles that you're looking at, those 2 candles over there. We'll talk about them in a moment. The S&P is down 4 at 1334. The comp index is down much more at 28.48. That, of course, is because of Apple, and you've got a number. You've got ISRG. You've got just a slew of stocks there, but a couple have made up for it on the upside. We'll talk about those as well. Now, what's really interesting is you've got gold up. It was up sharply. The GLD's up 186 at 155.38. Gold is up 24 at 1600. As silver's up 0.36 at 3.0. It was copper's up 30 at 27.11. High grade copper is up 0.03 at 3.389. This is just a sign that there's an international slowdown. I'm sure of it. And then finally, you got two things. You got crude oil, which is down 1 at 87. And then bonds. Bonds are again, they have again shown a new high. Well, the TLT has. Bonds are down. That's interesting. Now they're down. Bonds are down. What are they down? 14.30 seconds. And the dollar is down 28 to 83.72. So let me just do this. I'm going to give you the parameters right now. I'll be filling in for Larry, so we'll be going over these in a moment. But there are a lot of things to look at. This rectangle, basically it's a rectangle trading range. And when a rectangular trading range begins, it can last a lot longer than your patience, but make it real simple. If the Dow closes above, I don't think it can right at this point, closes above 12,990s into the 12,300 area, closes in the 12,300 area, that is very good action. Conversely, if the Dow closes below 12,500 into 12,400s, I would say that it won't take much because the VIX, the volatility index, which is still in the 20s, will very quickly go to the mid-20s, and that'll create really intense selling. The Dow will go quickly down to the 12,000 level. So now let's do these other things that I said I would do. I wanted to look at, now I'm not going to talk about the weekly chart right at this particular moment, other than to say that we've gone to a very quick peak A, peak B, and C. And there again, if the Dow closes on Friday at 4 o'clock underneath 12,400, just be real careful. And if it just goes to the sideways trading range, holds in at about 12,690 to 12,750, it just says, hey, the sideways action, very selective stock picking is going to continue. The monthly chart, I'm waiting until the end of the month before I even discuss it, because it's made a peak E, a definitive peak E, and the stochastic and the MACD are really on the tipping point. Let's see what happens. So that's covered that. Now there are a couple of things I want to do. I just wanted to take a moment here to say, I love reading stories like this. I read about this man years and years ago. Herbert Vogel just died. He was, I don't know how old he was. It probably says somewhere over here. Well, he was getting on. But he and his wife started this, it turned out in the end to be a world-famous art collection. But that's not the interesting thing. What is the interesting thing is what human beings can do when they are motivated, when they have a desire. Now, usually, this is Steve Rose's area, the motivation. But I just get so inspired when I see this. Herbert Vogel, a retired New York postal worker who with his wife, Dorothy, created one of the world's most unlikely and most significant collections of modern art, then bequeathed much of it to the National Gallery of Art, died July 22nd at a nursing home in New York City. He was 89. Isn't that a beautiful story? This guy, he and his wife, they would put down some money and they would pay it off. Now, it turns out that some of the artists lowered their prices dramatically because they started to get the impression that these people were building a fabulous collection. They wanted to be part of the collection. They wanted the notoriety. So, LeWitt dropped his price. He dropped 3 zeros of his price to be able to give it to them, and he gave them €1 or something to pay it off. I love that story. I think that's fantastic. So that's just a little inspirational thing there. Now let's get back to the market, the seriousness of the market, because believe me, I think this is a serious moment in the market, and I'll explain why. When we are looking at the longer term, and we are looking at, I'm going to get more into the bonds and all of that when I do Larry's show at noon. But when I'm looking at this bond contract, which has been in a 21-year bull market, is actually a 21-year up channel bull market, but it's a 30-year, 31-year bull market. You've got to say to yourself, is there a relationship? And you remember, I've been talking about this. I'm almost sure it's 10 years. And I forget these things. It just, they come about and I say them and then I repeat them. And I never notate the day. But I remember talking years ago about the Japanization of our bond yields. That when things get really bad in the economy, the Fed is going to be forced to push rates lower and lower. I never thought that was possible until Japan did it. But what if there is a similarity there, and that similarity says, you think it's just the bond yields? We could land up doing what Japan has had. They've been in a pretty lousy economic situation for a long time. Well, all I can say is this, that under every other condition, I'd be looking at this and saying, the next peak made in the bonds, that is the next lower high in my monthly chart, which you can see now. I'm just going to squash it so you can see how fantastic it is. Look at this. It just goes on and on and on. Look at that up channel. Never broken on a closing basis. If it went underneath, it went there just for an intra-month thing. And even on the upside, we finally broke to the upside. Isn't that incredible? All right, lots of notation there. I'm not taking that notation off because that's what I use. I show subscribers constantly. Well, we've made a new recovery high. And today's high is 152.15. This is the continuous contract. And the high is 153 and 2/32 this month so far. So we're now above that trend line. What often happens, we saw this in the GLD. I'm jumping through to give you a comparison. This is comparison shopping here. The GLD and other stocks or indexes have done the same thing. The GLD was in this magnificent 2-year bull market based on that up channel. Let's just squeeze it and see. Yeah, it's starting from the peak F top. Oh, I'm going to talk about the peak F in a moment. Top back in December of weekly chart, December the 4th of 2009. Then it starts the up channel. So since then, it's 2.75 years, 2.5 years. Well, it landed up, breaking the trend line resistance for the first time, soared to a brand new ABCD. Remember the ChapmanWave, you look for 4 peaks, and then you've got to be a little bit careful. Well, it goes to 185.85, comes back, tests the up channel resistance that is now support, breaks it momentarily, then goes above it just briefly to a peak B minus, and then comes back down, and it tests the up channel support at 148.27, and that's the week of the 30th of December. Then it rallies and it bumps into the resistance right there. Remember, this is the chart you're looking at, the big chart that I'm showing. And what does it do? It goes to peak B minus because it breaks below the starting point of 154.19, goes to 148.27. Oh, sorry, goes to B minus. The second one goes to B minus as well. Stops at 174 round number, pulls back, and it hasn't broken underneath the 148.27 level. I'm expecting that very soon we're going to get a sudden slide in gold. That will make a sudden breakout to the upside in the dollar. We'll talk about
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. 877-927-6648 is the number to call. Basil Chapman, Tiger Technicians Hour. Dow's up 44. S&P's up, down 3. So, I'm talking about the GLD monthly. That is the Spider Gold Trust, trades at 1/10 the price of spot gold. In the technique that I use, called the ChapmanWave, the way to start a particular buy signal is to look for the most obvious low bar, and that's where you can start. And if you go back to the GLD low of, let's see, that would be 68.81, November of 2008. That's the most recent one, after a peak D-top at 100.44. You can see that the stochastic was just a little above 20%, and the MACD was trying to turn around. That started a move that went to peak, and in the song that I wrote years and years ago, called Buy at the Low and Sell at the High, essentially the premise is, and the song actually captures just about everything that in the core of the ChapmanWave. It says the market goes up, the market goes down. Supposed to buy at the low and sell at the high. And you go snap, snap. But you know what we tend to do? We buy at the high and we sell at the low. And that's what you've got to be real careful of. There are times, Ken Shreve talks about his breakout investing, and he's very comfortable in certain situations buying the breakout. In my work, you want to buy a breakout in a strong leg when a strong leg B, if you aren't in, and leg B is taken out by 1 penny starting leg C, because they can go to C and then D. So there's certain ways of doing it. So the ChapmanWave is what you need. You buy with the Stoke and the old MACD. So what does that mean? The Stoke is the slow stochastic. And you wait for that turnaround. Usually the best one is when it goes under 20% for about 3 bars and then goes over 20%. That gives you a really nice buy signal. But then you have to watch the MACD, and that MACD has to be turning around. And you have to watch the price movement concurrent with the price of whatever it is you are following. In this case, it's the monthly chart of the GLD. You follow the price and you wait for your peak. So the song goes, you follow the price and you wait for a peak. Higher highs is what you seek. The wave goes to A and then to B. Even the anticipated C and D. That's exactly what happened here. Look, the GLD goes to a peak A in February of 2009, 98.99, pulls back, holds the 9-period exponential moving average. I gave a webinar just on the 9-period on the moving averages. And then it goes to peak B at 119.54 in December of 2009. Remember, we're not getting graded for singing here. It's the words of the song that count. Pulls back to the 9-period moving average. Then it goes to C. And C is at 123.56, June of 2010, pulls back to the 9-period moving average. All the time, the MACD fast moving average is holding beautifully above the red line, the slow moving average. Stochastic gets over 80%. Remember, every book that tells you that the slow stochastic over 80% is overbought. I say, no, wrong thinking. It's where you want to be buying. That's where it must hold. That's beautiful. If it's under 80%, you've got to be careful. Ha! So the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you gotta do is make your stops real tight. Why? Because at D, very often, that's when you can get your sharpest pullback. Now what happens is it pulls back, but this is so strong based on the MACD and the slow stochastic that it holds this white line, the 9-period moving average, 9-month moving average, and it goes to an E. And then it goes to an F. Well, the song goes, suddenly it goes to E and F. A bell rings so loud it can make you deaf. Now, what do I look for when I'm looking at tops? I go to the shorter term periods. I look to see if they're round numbers. I look at the candles. I look at all sorts of things. But here, there was one very obvious thing. If you're looking at the slow stochastic, can I draw it in? Yes. You'll see that slow stochastic, that line that I've just drawn in. Now, let me just take that away. I'll remove the trend line. I'll put it here. The price was going up, and the slow stochastic right there was starting to go down. That's the internal mechanism. This is the torque. The slow stochastic gives you the torque, and that torque can push you from the starting point to where you can use second, third, and fourth gears. It's the same thing on the downside. So it gives you the torque to the downside silently, because if you're looking at the price, you say, hey, we're getting to new highs. It goes to peak F, and then it gives you a sell signal. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high, and you buy at the low. So what we're looking at here is that it's pulled back to this dashed line trend line in the monthly, breaks under it, and it cannot break above. And it says the 9-period moving average could now turn into resistance. I'll be right back. Basil Chapman, Tiger Technicians Hour, and the Vocal Show. Be right back at 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So, in other words, the GLD and gold itself have made peak F tops in the monthly charts. For me, that's a signal to say, time out, fantastic move to the upside. I'm looking for lower prices, and lower prices into the end of August, beginning of September, and that's when I think you're going to get a pretty darn good signal that says you can start looking at those gold stocks again. Gold stocks maybe even a little earlier, but gold itself based on the GLD. So I had a question. I want to do, based on that song, just real quickly, going to a peak F top. What did we have? I spoke about this, been speaking about it for months. I spoke about Intuitive Surgical giving monthly tops, CMG a monthly top, so many stocks, and Apple possibly giving a monthly top. Well, there's that peak F top. Remember, over the up channel, back down again to test it. Starting point is the lowest low bar, most identifiable one, back on at 310.50 on the week of the 24th of June. It goes peak A, B, C, then it goes to D and E, and then suddenly goes to, remember, E and F, and it went to E and F at round number 644. I look at round numbers, the number of round numbers that I've been seeing at highs lately is just incredible. So it pulls back. Remember, I spoke about the other round numbers that it went to, what was it, 5? Apple went down from the last peak. Yeah, that's right. Peak E at 644 in the daily. It plunged to 555 round number, ran up to 618. And what I said, if it doesn't close above 618 within 2 weeks, that was at that time, it's going much lower. Well, it went down to 522.16. ran for another A, B, C, D, E, and then it went to an F and a G, and that is very unusual. That second, we call it the camel hump. It's just this is the double camel hump, where you have the stochastic make another arch formation and fail, and that's what's happened to Apple. And if Apple breaks 565, closes under that, it's at 572. At any point, there's a really good chance it's going to test the 522s, and then 518 will be the target on Apple. It has to, in the next 3 to 5 weeks, break above 620 to be able to show the kind of resiliency. I just suspect it needs a timeout. There's no big deal. Monthly is only in D after a spectacular move. It just needs timeout. Now, I had a question in the den. If I would look at the TNA for ZIP. Now, the TNA is, I'm going to do the TNA right now. The TNA is the small cap bull 3 times, what is this? The ARCA. So this is the ARCA small cap bull 3 times shares. I just wanted to get the name correct. So now what I'm looking at is on the daily. I usually use the root, which would be the IWM. Could even be the IWB, but I'm going to use the IWM. Meantime, looking at the chart, here's the TNA. It makes a low bar. Remember, most identifiable low. And you look at the stochastic. The stochastic made a higher high as it was making a lower low. That's a positive divergence. The MACD was making a slightly higher fast-moving average high than the low when the TNA was making that previous low on the 21st of May. Good positive divergence. What does it do? It goes from a low of 41.55 to peak A on the 7th. Opens at 50, a round number by those round numbers. 50.10 was the high, pulls back, breaks 50. Once it breaks that, that's a big positive, and goes to 50.35 for peak B. On the 11th of June, pulls back to the 9-period moving averages, finally uses it as support, goes to peak E at 52.50 on the 20th, pulls back, uses that 9 EM again, makes a cup and later. Remember, I love the cup and later because it takes you much higher, and that allows you room to raise a stop. I mean, that's a real move that goes from, in this case, from the 46 level to the 58.60. I mean, that's really something. And what does it do? It breaks out above the 200-period moving average and goes to a high of 58.86. This is the TNA, which should match the IWM, and it does. IWM, there's IWM, much greater detail. This is my subscribers have been getting. I've been showing them this chart. Actually, I'm showing this chart with a white background so they can print it out. And what happened is that the IWM broke the support. Now the 200-period moving average is at 77.83. So if you are in the call position, let me just double check. Get a chance. I bought the 49 calls at 2.75. No, of the TZA, of the TNA. So let's go back to the TNA. Now, I tried to pull up my options. Just for some reason, I couldn't find it on my options, on the page that I have the options. But basically what I'm looking at is it needs very quickly. Let me use the IWM because you're going to have to use that as the root in any case. I've got this all notated. The IWM 120-minute chart went to a peak D, pulled back, went then to a peak E with a very quick ABCDE. That's usually a negative, and it pulls back where from the most recent high of about 80.74 at 11:30 yesterday, I guess it was, on the 19th. Oh, a few days ago. And then pulls back sharply, and it goes where? It goes to 76.22, above the low of 75.42 back on the 26th of June. This is what I'm saying to you. I would be real careful. This is a counter-trend bounce. I'm staying in my core positions. In my opening call, we had some fantastic profits in one particular issue, which we now have something completely different going there. But we're staying in our short positions on the ones that I believe that are the monthly charts that give me that hat-trick sell signal. That means monthly, weekly, daily are all in down moves. But IWM could be that as well. I just don't know yet. I have to wait for the end of July. And I don't know yet about, I know that the weekly is in a down move, in a down mode, a sell mode. So this has to be a counter-trend rally. And all I can say to you is I would not stay in these calls if the IWM takes out 76.22. So in the TNA, if the TNA takes out the low of yesterday of 47.12, it's at 48.01. That's a lot of points for an option. I'd be very careful. What you want to see is by the end of the day today, and this is a really important day for internal strength. Why? Because if the VIX index, that volatility index, which is at 20.08 right now, having made a peak C, stays in the 20s, that selling pressure is going to keep coming in. But if it starts to break to the 19s, then all of a sudden you're looking at the right position. So I'm saying to you, my stop would be under IWM, the low of yesterday. But now what you want to look for is this. So now let me go back to the IWM. IWM. Now the Dow is running because of Caterpillar, which came out with great earnings, and Boeing. And Boeing came out. But I'm looking at this and I'm saying it's so selective. I don't know if there's enough power. The S&P 500 is down 2.20. The Qs are right now, the composite is down 9. A little bit better than it was when I started the program. So you need to see by this afternoon the IWM get to about 76. Oh, it needs to really get over 77.18. But just on a conservative basis, let's just say it can get to 76.90. By tomorrow's opening, if tomorrow's opening the futures aren't up, and by 10:05 tomorrow morning, that's Eastern time, within 35 minutes of the opening, the IWM just has to be in the 77. It's at 76, 71 area. It needs to be at 77.20s. If it's that, and leg B or something like leg B or C, that's going to say, great, now you can look at 78.51 as the 200-period moving average as a potential target. But the VIX, the volatility index, needs to be quite a bit lower. So that to me is very important. All right, let's go to our calls. I hope that helps. Let's go first. Updated call. Oh, I didn't get an updated call. Got a whole bunch of people waiting. Here we go. We've got our first caller is Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good, Basil. How are you?
Very well, thanks. Wow, I didn't realize the time was flying by. I wouldn't have even sung my song. You wanted to look at HPY?
Right, HPY. We actually met in Nashua like 10 years ago.
Oh, all right. Well, it's good to speak with you. So this is, who called me on this? Heartland Payment Systems. Someone must have called me because I've got this completely notated. Okay, do you have a position?
Yes.
At what price?
That's right around here.
Okay, wait. So that's a long position or a short position?
I got a long position. I got some at 28.70. Some more at 29.70.
Okay. The reason why I asked you that, and at that moment that you said it, I just had a feeling I needed to ask you in which direction, and I'll tell you why. I have a peak E top. This, folks, we're looking at HPY. This is, oops, don't do that. Let me do this. There we go. We've got HPY, which is Heartland Payment Systems, Inc. So it made a top in the daily at 31.54. The next day, it went to 31.53, 1 penny lower. I look at those. I've done a lot of studies with these things. When I get to peak DOE and I see that, that's a heads up to say be careful. And yes, it pulled back from that level to the low 3 days ago, 28.55. The monthly, it must have been some kind of earnings or some kind of a report that came out. It hit a round number 34 high at peak F the week of the 4th of May. And it hasn't been able to even get into that candle, the wick of the candle. And the monthly is a peak E at 34 as well. I don't see too much on the upside because the MACD and stochastic are really very weak in the weekly chart. However, there's a story going on from the way it's acting. Is there something happening that I should know about? What's going on with this stock?
Earnings are next week. They're in the same business as PayPal. They do payments. Payments are going up, it looks like, the payment companies.
Oh, okay, great.
Like eBay, now, PayPal went up so much with eBay. So I think they're in that sector.
Okay.
Strong sector.
Then this is what I'm going to say to you. As far as I'm concerned, I would put a fairly tight stop on this, because if it closes under 28.50, the weekly chart starts to get very poor, and 27.53 is the monthly 9-period exponential moving average. So I have a tight stop. It's had a fantastic move in anticipation. If there's any bad news, this stock can very quickly drop to the 25s, some 25, 24 level. So I'm going to suggest that you sacrifice some of the upside gains just to be a little bit careful, because I've got a potential hat-trick top here, although the monthly is still very good in the MACD. Stochastic's pulling back, but the weekly stochastic and MACD are poor, and the daily says you got to be somewhat careful. So I hope I'm wrong, and I'm just going to say to you, position your stops so that no matter what, the last one doesn't go to 28.55. If it goes under 28.55, I want out of it. Now, here's the other thing. Going into earnings, as it rises, I would scale my stops proportionately, and the day of the actual news, I would lighten up. If there are gains, I would take some of those gains, and I'd lighten up for the close. Why? Because if they're fabulous gains, this thing's going to go into a rectangle consolidation and then move back to the highs. If it's bad, you'll know you don't want any part of it, because it's going to drop very sharply. So you'll have a chance to get back in, but I'm just thinking of money management. So I hope that helps you.
Yes, very good. Thank you.
Thank you very much for calling, and I do appreciate it. Let's go to Dan in North Reading, Mass. Hi, Dan. How are you?
Good. How are you, Basil?
I'm very good. Thank you.
So thought I'd look at Cheesecake Factory here as just one of the many restaurant stocks that's a potential short.
Yes.
Although this is a little choppier than the other ones.
Well, there's a pattern that's forming, folks. Cake is the symbol, and this is one of those things I guess is most appropriate right now in the United States of America to be talking about cake, because we're going through some financial difficulties here, and there's a lot of talk about wealthy people and not wealthy people. So let them eat cake is going to be the watchword here, and what we're looking at is peak F at 34.07. Isn't that fascinating? Call before yours, there was a $34 peak F top in the monthly and the weeklies, and here cake has made a peak F top at 34.07, 7 cents high back in July of 2011. It's had a pretty good rally. You know, I've never quite understood this place. I've been there just a couple of times. People love it to go there, but I just think it's in an area that's discretionary income, and the discretionary income stocks are getting hurt. So this is what I'm going to recommend. I don't know when the earnings come out. Have earnings come out?
I think it might have been already today.
Oh, today?
Yeah, I think it was this morning. It was either this morning or this afternoon.
Okay. Why don't you check on that? If earnings have come out and it's down 30 cents at 30.14 and it's under the 200-period moving average, I'm going to make a suggestion. And that suggestion is, yes, it's making the H that goes to an M pattern, so that if it hits the 29s, it might bounce again. Trigger in the den says today. So probably it hasn't come out yet. If earnings haven't come out, I don't know if you want to risk it. Everything about it says it should come down. I suspect that if you had to short it right here, would you short it or buy options?
Short it, and I'm fine for, well...
Would you give a 10%
I'll wait,
risk?
It'll probably be too volatile anyway.
Yeah,
but
so...
I was just thinking in general.
Okay, then, all right. I tell you what I'm going to do. We've got a break coming up. I think I can already visualize a strategy right here. So hold on. I'll be right back. We've got Dan North Reading holding on. We're looking at cake, and then we're going to Ken.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and in very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, just to let you know, I'll be doing Larry's show straight after this, so I'll just be continuing, and I'm going to go through the home builders because it's really important. I was a little concerned about those home builders based on the ITB, the construction index, so we're going to do quite a bit of work on those coming up in the next hour. We're looking now with Dan at Cake, C-A-K-E, and it's the Cheesecake Factory, and earnings come out at any point, but at 2:30 today they have a conference call. So that's what I've got listed here, webcast conference call. So I'm not sure the earnings have come out yet, but I feel quite comfortable in saying that at best it could retest the previous high of 33.30 on the weekly. It's 33.30 on the monthly. It's 34. And have a lot of trouble breaking above that, but there's just a really good chance that if it takes out by the end of the day, certainly 29.79, it's going to be going down. And that monthly chart then says in July, Thursday, I think it is Wednesday or Thursday of next week when it's the last day of the month, if it is underneath the 9-period exponential moving average, then CAKE could really trade with lower highs and lower lows. Here's my thinking. Just try to find out if the conference call, the earnings have come out yet. If they haven't come out yet, I would probably say, you know what, wait a tad. You can do one of two things. You can either start a small position. Now, I mean small. In other words, if you were going to buy like a third now, buy even a half of a third, a sixth, just to get your foot in the door. But the reason why I say I'm comfortable in saying it, because it's on the 200-period exponential moving average. If it was to pop, then 31.25 to about 32.30 is about the resistance area. So it'll have to be like Panera, spectacular earnings or something there that says it's going higher. And I'm going to talk about Panera. If I don't get a chance now, I'm going to talk about it later on, because I think Panera might have made a top right now, a short-term top, and we'll look at that a little closer. So here's my thinking. Start a tiny position here. And if it pops up, you have to then wait. You have to wait as it starts to if it starts to pull back from the high that it makes, you can add another very small position. So 2 small positions will add up to the one that you were originally going to go if you were going to just start a position. And then by tomorrow, I'd say by tomorrow morning or tomorrow afternoon at the latest, you're going to get a real good feeling. If this is it, Cheesecake Factory has made its high for the month and the week and the day, and that says it's a hat-trick top. It might just go into a rectangle formation, but that can go all the way down to 24. That's 6 points. That's 20%. So that, I hope that helps you. That's just the way I would do it. Or you can just completely wait for the earnings and say, okay, if it starts to go down before the conference call, you can actually start a little position on the short side. I'm not looking at this as a long at all. I'm looking at this as a potential short. Hope that helps you.
Thanks, Basil.
Thank you. Let's go to Ken in Fort Madison. Hi, Ken. How are you?
Good morning, Basil. Thanks for taking my call.
My pleasure.
I'd like to have an entry point on Ford. I don't own it yet.
Okay. Did we speak about this some time ago? And we said, let's see how it tests the previous left side low?
I don't think I talked to you about it.
Okay. Someone I have got written down. I don't remember who. And I had said it's worth waiting to see how it can handle $9.05, the low of $10, the low of the week of the 7th of October of 2011. So, folks, we're looking at Ford. Symbol is F. It's trading at 899.07. I am actually very concerned because these, the autos are making better cars than they've made in 50 years, 40 to 50 years. That's my opinion. And I'm pretty sure that can be backed up. So I'm going to say to you, don't do anything just yet. Let's hold off on Ford. Let's see how it goes. If you can call me Friday, I'll know better. Because if Ford is now bouncing, it's at about $9.45 to $9.55, I might say, you know what, take a little nibble. But I just don't want to do anything right now. Let's give it a day or so. Okay?
Okay, thank you, Dale.
Thank you for calling. Folks, I'll be back for Larry Pesavento.